Major averages climbed for the third consecutive day. Hello, everyone, and welcome to the Daily Market Commentary for Thursday, April 24th, 2025. I'm your host, Dr. BJ Love, and I will be bringing you today's broadcast. Here at Chart Signals for Thriving Profits, use time-tested and methods to help us to navigate these markets with certainty, calmness, and confidence. The major averages were able to climb higher for a third consecutive day, sparked by a report of progress in trade talks with India and South Korea. The different indexes climbed into the close and finished at the highs of the session. The Dow Jones Industrial Average gained 487 points, closing at 40,093, while the S&P 500 picked up 109 points and settled at 5,485. The Nasdaq jumped 458 points, finishing at 17,166. The heartbeat of the market was bullish. The VIX fell by 1.98 and closed at 2647. And as we have reiterated for years, the VIX is the fear gauge, aka the fear gauge. And as long as that gauge is above the threshold of 20, the market seems to be very volatile and usually moves in the inverse direction. Crude oil prices rose 39 cents and closed at 62.66 a barrel. Gold prices jumped $63.50 and finished at $3,357.70 an ounce. Bitcoin closed the session at 92,700. Now let's dive into these charts to see exactly where the market is currently heading. We use our long-term chart, which is our weekly chart that has a color code that shows if the background is green, we are in a bullish configuration, and if the background is red, where the price bars are, that shows that we are in a bearish or downward trend. So we're going to go ahead and begin with the S&P 500. We're going to enlarge this particular window here. And as you can see, since the the beginning of last year, April of 2023, we have had this green background and the prices have been going, even though they were fluctuating on some weeks. Each one of these price bars represents 1 week. It has been rising, rising, rising. You have a little pullback here, rise, 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 have a pullback here, rise, 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 have a little pullback here, and it topped out somewhere in December of last year at 20,224, and it has been declining week after week, week after week. And our theory here, as long as the price remains above rising moving average, here is our long-term moving average, which is equivalent to the 200-day moving average, and here is our 10-week moving average, which is equivalent to about the 50-day moving average. Now, here the price bars fell below these moving averages, and the lower moving average, which is the 10-week moving average, crossed below the 40-week moving averages, thus triggering a change in character, meaning that now that the background where the price bars are is red, we are in a bearish condition and have been so since the beginning of March. We continued down for a second week. We pushed up in the week of 4-7 with a rise in price. Last week we had a fall in price, and this week we have a rise in price. Prices have been trying to recover from that deep dive, but as you can see, we have price that is below falling moving average, and our indicator, our supporting indicator here, the MACD, is in a bearish condition. So we conclude this is the S&P 500, not the S&P 500, forgive me. This is the NASDAQ composite picture, and it is in a bearish trend. We're going to move on now to the Russell 2000. You can see that it has been down, down, down below falling moving averages. We have our 50, our 10-week moving average below our 40-week moving average, and then our confirming indicator, our MACD, is still in a bearish trend. So we conclude that the Russell is in a bearish trend at this particular time. We move on now to the S&P 500, and as you can see, again, with our color-coded background, we have been in an uptrend ever since April of last year, going up, 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 pulling back slightly, up, 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 but the trend has been up. As long as this trend line, our 40-week trend line, is rising and our price is above it, we conclude that we are in a bullish trend. Now you can see it topped out here about around the same time that the NASDAQ composite did, and that was around the week of 217, started to fall, and then it fell below our moving average, which is our 40-week moving averages, and that price is below the falling moving average. We do have what we consider a death cross, which is the 10-week falling below the 200-day moving averages, and then we have our supporting indicator showing us that this trend is forecasted to continue in the near future. Now that's the S&P 500. We conclude that it is in a bearish configuration. Now we have the Dow Jones Industrial Average. We can see similar pattern happening back in April of 2023, and for the past 2 years we've been moving strongly up, up, up with some minor pullbacks. Again, I reiterate, as long as the price is above this rising moving average and our background is green, we are considered bullish. That reversed, and when we had the high back in December, and it closed at around 44,925, or say 45,000, and has been pulling back ever since, and now we have a red background indicating that the Dow Jones Industrial Average is in a bearish trend. So that is the way we normally oh, we got one more, and we can, we had so looking at reviewing on all four, forgive me, we have the NASDAQ composite bearish trend, we have the Russell 2000 bearish trend, we have the S&P 500 bearish trend, and we have the Dow Jones Industrial Average bearish trend. So now moving on to our daily charts. We're going to see similar. This is our short term, so we always like to view our strong trend by having the weekly chart and the daily chart moving in the same direction. So as we can see right here, this is our daily chart. Now this is we have a long-term chart, we have our intermediate chart. So we're going to show the S&P 500 chart, and as you can see, it is moving in the opposite direction. This is a shorter term chart. Each one of these price bars represent 1 day. The ones we looked at previously represent 1 week. So now you can see that the weekly chart and the daily chart are both moving in the same direction, and it is down. That is the S&P 500. We're going to look at the Dow. We see the same type pattern. We are in a bearish trend on the weekly and the daily. We're going to look at the NASDAQ composite, same type pattern, down on the weekly and down on the daily. And we're going to look at the Russell 2000 down on the weekly and down on the daily. All right, now we're going to look at some sectors, and our sectors that we like that are showing uh, strong relative strength, as we like to call it, are the XLY, which is the XLY is the consumer discretionary. We'll go there. And we can see here that on the daily, okay, on the daily and on the weekly, we are down. However, we see, I like to show our relative strength that this is one of the strong sectors out of the 12 sectors in the stock market. We also like communications, which is the XLC. You can see on the weekly, it is having a pullback, but our relative strength line is maintaining. So when this correction is over, we want to look for those sectors that have strong relative strength in comparison to the other sectors. The next sector we have that shows relative strength is it's down today, but is also the financial sector. You want to especially see the financial sector moving strongly upward when the market recovers. And the next strong sector that we see is utilities. Again, all of these are in a long-term correction mode. However, our relative strength is showing that when this correction ends, we come into a new uptrend. These will probably lead the market, most likely lead the market because of the relative strength. Now, what are some of the stocks that are uh, really keeping up and not falling as much in this pullback? We have PLTR. We have Planeteer. Planeteer is a very strong stock. It started out last year at about $20 and moved its way up all the way up to 125. Now it's settling at around 112. Very strong stock. This is a buying opportunity. We like all of the features of Planeteer, and we still are invested in it, even though the tech sector is defying the tech sector move, because it is a tech stock and it's moving up on its daily and its weekly chart, showing very, very uh, strong momentum. Next one that is really uh, showing resilience during this downturn is the popular symbol T, which is AT&T. Last year it was $17, and it has moved up all the way up to $29, pulled slightly back and settling at around $27 right now. This is another one of those stocks that are showing resiliency and strength during this downturn. Now, as we can see, Bitcoin is starting to show some sign. So we're going to look at Bitcoin real quick. And Bitcoin is starting to recover from that downturn, and also gold and silver. Here's a look at gold. Gold has been on fire. Yes, indeed. And it is topped out at $3,509.90 an ounce and settling today at around 3,300. We're going to look at silver.